Good evening, everybody. Took me a second. Didn't know my mic was working. All right, let's go live here. All righty. Well, as per usual, everyone, we're gonna give everybody here just a few minutes, and then we're gonna go ahead and get started. All right. What's up? Good evening. Good evening. Good evening. Hopefully, you guys had a pretty good weekend. Felt kind of long. All right. So those of you in the Discord, if you guys haven't checked out Potter Analysis, below my page, I did post quite a few detailed charts with levels, daily charts on three of my top watches, which I will go over in detail here. But wanted to make sure that if you guys wanted a copy of those, that you could do that. In my channel. So what's up? Just waiting for market to open. Well, you're gonna have to take a nap first. So all right. Let's see, it's 8:25. What's up? Good evening. All right, I think that's enough. I am live on YouTube, so those of you guys who would like to join us there, the link is in the bio. But let's go ahead and let's get started. Let me get my pen. My pen. All right. So first things first, we got to recap last week. So we saw the S&P over the week. We saw it down. We're going to go weekly here. So we saw it down there about 1.31%. We saw the QQQ down 4.15%. Look at that weekly candle. And then you got the Russell IWM also down. Oh man, 4.64%. Look at that hard line right there, coming in key for that 207 level. And then you also have the Dow as well, which did recover and only down 0.23%, as a lot of those sectors are moving divergently from their counterparts. So anyway, this week we have a series of earnings coming from our big banks. And we're going to take a look at that here. Hey, what's up, Jared? How much is a it is just in the lull, still pretty much in the same place. What indicators am I using? If you would like to see my indicators, I will copy and paste them right now and tweet them out. So make sure to go follow my Twitter. I'll paste those once again. There, my latest tweet is that. Anyway, so we have a series of earnings this week coming from our banks. We do have a short week. No trading, I believe, on Friday. It is Good Friday. That means it is a short trading week. I'm going to repeat that. It is a short trading week. And what do we know about 3-day weekends? What do we know about investors not wanting to do over 3-day weekends? And what can we expect from a 4-day trading week, which is usually lower volume and lower volatility? Not always, but usually Monday and Tuesday are the days we get the liquidity. And then Wednesday and Thursday tend to be a bit of chop. But we will see, of course. Monday, nothing really as far as earnings are concerned. But Tuesday, you do have a little bit of a handful. But Wednesday and Thursday is when we really kick off the earnings. We got JPM, Delta Airlines, Bed Bath and Beyond, BlackRock, all coming in on Wednesday. We've got Wells Fargo's, Rite Aid, Citigroup, TSM, Goldman Sachs, United Health Group, Morgan Stanley, a couple of other small key names there. But then next week, and we have a 4-day week. So this is the only variable that I see at the moment. Ouch. The only variable that I currently see at the moment is the fact that we are running into earnings season as far as a 40 weekend and things that could obviously throw a kink in low volume prediction. But anyway, you see Netflix, Tesla, Snapchat, and of course the number of companies reporting going up, especially on Friday, going into the next week. We really, really kick things off going into the middle of April. So anyway, that's the earnings calendar. A couple of headlines here. Hold on 1 second. Before I move on any further. So obviously we had the Bitcoin 2020 in Miami. Bitcoin fell 6%. Ethereum lost under 4.5%. And another couple of large caps. I don't really cover this stuff usually, but Solana 14.5 to the downside and Terra 14.8. The only one that was up was Dogecoin. And it rose 7.4% thanks to Elon Musk. And Elon Musk, of course, having heyday since becoming the biggest shareholder in Twitter earlier this week, even though he's not even on the board as of now. As of this hour, he's currently holding a Twitter vote to decide whether or not to turn Twitter's San Francisco office into a homeless shelter. I'm not laughing. It's just that headline just seems so dystopian. Uh, he has a Twitter poll right here, if you guys don't believe me. Convert Twitter San Francisco headquarters to homeless shelter since no one shows up. Anyway, sorry. I just thought that was too funny. That was such a good tweet. I gotta retweet that. So anyway, God, Elon Musk going ham, dude, on the internet. If he's allowed to have Twitter, I think at least Donald Trump should too. Um, Anyway, so we have all of those. A couple of different key headlines here. Blackstone preps for alternative strategies and 401ks. After 2 summers of love for alternative assets, the world's largest equity firm is readying for a retail rush. In fact, alternatives might be coming to your 401k. Bank of America cautions recession shock in a client letter. Bank of America put it plainly to its customers: to kill inflation, we might have to kill stocks and the economy. Recession has been a recurrent theme in current months, fetching concerns from a number of financial institutions. Um, anyway, so we also had the Russia faces sovereign external default. So Russia could default on external debt for the first time since 1917, in part because of its inability to make payments to the U.S. in U.S. dollars. Russia has struggled to make good on debt obligations to foreign debt holders, and that is why that is happening. Um, all right. If you guys would like to yeah, if you guys on TikTok would like to see my screen in greater detail or actually have one of your requests answered as far as a stock request, please hop over to the YouTube live. That's currently where I am residing and where I am able to see your comments in chronological order. The link is in the bio for that. So, um, anyway, so economic calendar. Going into this next week, we've got that's not the week. So April 11th to 15th, we actually do have some high impact data coming in April 12th and April 13th. I'm trying not to laugh right now for reading that Bank of America or Bank of America headline. That was too much. Anyway, so not tomorrow, but Tuesday, we have CPI, core CPI, and Treasury budget. Core CPI and CPI are high impact data. If you don't have this website, I have this website saved. This is um, uh, the briefing.com and the economic calendar. I just tweeted that out for anybody looking for that. Anyway, so we see the consumer price index is at 8:30 Eastern time on 4/12. That all coming in, and then 1400 for the Treasury budget. April 13, we do have PPI and core PPI, MBA mortgage application index, and EAI crude inventories, and then a slew of stuff coming in on the 14th, which is of course, I believe. No, okay, we are trading that day. Retail sales like auto, initial claims, initial continuing claims, excuse me, import price index, import prices ex oil, export prices index, business inventories, and University of Michigan's consumer sentiment. So that's the economic calendar going into next week. Are we looking bearish? If you're trying to learn how to trade, the link in my bio for our Discord has a ton of free information, thousands of dollars worth of free books and links and education hand typed by me as well. So, um, all right. So we covered pretty much everything. Um, so we're gonna take a look. We're actually gonna use this as an opportunity to look at our major ETFs and look at the weekly. So what do we know? Speaking of candlestick patterns, right? Um, Weekly time frame. We talk about like, okay, a daily time frame is obviously has a higher impact than the hourly time frame, and then so on and so forth. Here we've got the weekly time frame with a really, really bearish candle here. And then following through at that same 453 mark, we did end up moving back down. You can see that that point of control, which is 444, and you see a lot of wicks, a lot of levels um, since being up at that level. But what you see here is the potential for some serious continuation to the downside. My whole ribbon indicator, guys, is one of my I say trusted indicators, but it really hasn't failed me. And the higher the time frame, the better. And we are still red, and still underneath that. Now, these are total reversal candles at the moment until we see that follow through move underneath 444. And that's basically the gist of what I want to tell you here is 444 is the mark. But speaking of that, go down to this hourly time frame, and we're going to zoom in a little bit here and show you guys what we're working with. So right now we have one, two taps of resistance untouched. And gap has been filled. So, or excuse me, the gap has not been filled. That gap closes at 451. So there's still the potential for another leg up to the upside, and a test of possibly 452. But from that downtrend rejection, if we even get it, I would contemplate further downside from there, especially given the sentiment that we're already being handed going into this week. So that's kind of what I got going on for SPY. Thank you for the lights, everybody here. I really appreciate it. I'm live on YouTube for those of you guys who are just tuning in. This is a trading view. This is a heat map. Um, yeah, thank you guys. Make sure to hit that like button if you guys are digging the stream. As far as I know, futures are down, pretty bad, actually, now that I look at it. Um, Currently sitting at a 447 support. Um, so looking at SPY, it looks like we could turn over. So 443 for me and 444 are the key levels going into this week. Alrighty. Watch list for this week. I'm gonna keep it short and sweet. If you guys didn't see my breakdown in the Discord, it is posted in Potter Analysis in my page. Um, so Facebook has what is potentially going to be set up as a cup and handle. And that's on the daily time frame. It looks pretty good. I stepped out to the weekly time frame here, and of course, you do have, what could potentially be a reversal candle here. I know I got a lot going on right there, but you have what could potentially be a reversal candle. One main thing, and heading back down here to the daily, let me give you my dolly back. Heading down here to the daily that I'm looking at, and I'm going to show you two different time frames that I'm looking at. So because it looks at and holds that cup and handle sentiment, we have some pretty key levels here, but easy levels to read if we do break to the upside. So we finished with a doji candle on Friday. So using the doji strategy, we could look at 225 or that day's high as a potential level to break to the upside. But warning, we do have a 9-day moving average on the daily at 227. And that also begins the gap. There is a smaller, and we're going to head down to the hourly time frame now that we got what's going on here. on the higher time frame. So as far as the lower time frame is concerned, this is what I got going on for Facebook. So as much as this looks really tempting to make as a support, that may be a higher time frame support. I've seen a couple of people do that. I like this one, and I think that there is a potential reversal in that. So if you can see right here, heavy consolidation. But what does this heavy consolidation do? It lets us know that there should be a decent move to the downside. From right now, from what I can see, it might be a gap down. Anyway, so this is what Facebook potential falling wedge. Of course, until we get down to support, we will not know. But we have a key level here, and it's marked by the 200-day moving average. Damn this thing. So she said. Anyway, so we've got 221 and 220. All right, to the downside. Those are two levels for Facebook. If we go to the 15-minute here, right? So if you're too zoomed in, zoom out, you'll see what I got going on is or what I keep saying that, I don't know why. Facebook has three taps of support. One, two, three, for what appears to be a descending triangle. And running it off from this high and pulling it down to this low, you can see that that is exactly what it is. It's a consolidation pattern, and it is bilateral. So that means that as it climbs up, if it was right now, it looks like it is not. What appears to look like, or what it looks like is going to happen is we're going to gap down, possibly to that 221 target. You would hope for a quick gap fill to the upside, and then looking for a level to short, maybe 225.55. But ultimately, it's going to be the 220 mark that's going to allow us to drop down and be or in and around the two. I have it marked out as the 216 range for Facebook. So, but that's kind of what I'm looking at going into this week. The beautiful thing is that it has a gap to the upside, and it has a really good targets to the downside with low volume here. So I really like Facebook for a leg down for what could potentially be red to green. But of course, we'll see how that support holds up going into Monday. So, is the heat map built in TradingView? Yes, it is. If you guys have any requests, those requests can be taken on YouTube. Um, we'll look at QQQ. Yeah, yeah. Just give me 1 second. We'll take a look at those, and I'll take some of your guys' requests here. So, lastly, so I'm going to mark these out, and again, this chart is in my Discord, so in my analysis page, you guys can see it there. Pivot point here on the hourly. This is a potential long entry. So setting alerts at 220, 224.70, 225.38. Ooh, give me that. There we go. And that will set us up for a gap tap at 227.13, 220.89, and then the gap fill at 230. So staying long through that gap, if you're going and legging in possibly with shorter expiration contracts might be the move. So what's the ribbon on YouTube? That is the whole ribbon indicator. So that's Facebook. Next up, what we got is JD. So this one is absolutely mind-boggling because I sat and stared at this chart for far too long. Going back, I looked back a while, trying to get an idea of what exactly is going to happen here. Now, the beautiful thing about JD is it may just gap down, and I still have JD puts, and I might get smoked here, and that's probably why I feel a little bit weird. And I'm going to talk about it because maybe not smoked, because here's the thing: if it gaps down, which it likely will, due to market conditions, then I'll likely be able to get out. But if it does not gap down and it holds divergent in at all, then if you look at the hourly, it is absolutely maddening. Look at how crazy this price action is. Every day is a small gap down, maybe a small push down, normally closing within the same range. And it's done that going back to since its earnings all the way from March 17th. So we've seen an incredible amount of time wasted in this range for what could be a falling wedge. So I sat and, I try not to force drawings or force things because that's normally when you will mess up because people want to see stuff that is not there. And I thought, okay, maybe we might have the world's most intense falling wedge. And due to that fact, and I did mention that in my analysis, um, due to that fact, I will be watching it, and you can see that this is the area of focus here. S1 pivot, potential support, right? So once we cross below 55.50 and really $55, right? That's when I'm going to be like, okay, now we can look at JD short because if you look, there's a massive wick off of $55. So it's 55 and 54, 40, 75 that can be a launch pad and a retest level. So where if you're playing weeklies and you play the break, then you can watch for that flush down. But of course, we're going to talk about all these levels and the setups going into greater detail tomorrow because that's when it really, really matters. But anyway, JD, I'm thinking that we might be able to get a bite out of this gap if the market moves to the downside. If it doesn't, it's still okay because we don't need to be biased. We just need to make money. Here's what I'm looking at. We've got a gap here, right there, starting at 57.81, closing at $59. Point of control 59.50. Of course, psychological number pivot point $60. There's a gap in there. That's probably not a gap that I would play unless I had already been in a long position. So but anyway, that's what I'm watching on JD. Also Tesla. So I know a lot of you are probably some Tesla junkies in here, eager to play this week. So curious setup here. Hourly, a lot of wedges, right? These can and will fail. They will. We already see one, two, three strong rejections. The beautiful thing here is again, if we do and this is what I said about if we do gap down, and if I think I've discussed this before. For me, when we gap down, it if I'm a bear, it puts a pit in my stomach because buyers are going to immediately go for the gap. They're going to immediately buy the dip, and that's going to be the initial move. That's why when you swing down, you want to be able to um, um, take profit quickly if you're in anything shorter expiration. Anyway, that being said, and I'm being liberal, a little bit liberal here, but I think that Tesla might gap down and fill the rest of its gap. So it did not fill all of its gap all the way to 1010. So that's where Tesla should bounce. If we gap below it, then we'll talk about that in the morning. But that's where I'm thinking that we could gap down to, and then that would give into a possible reversal. Of course, using 1025, you could watch a potential gap fill to 1056.75. So I do like Tesla potentially reversing out of this and then going for the double gap above it. Otherwise, to the downside, if we lose that 1010 area, I do have a setup for the downside. Zooming out here, I want to show you guys this is more important than what I was showing you guys on the hourly. So look, one, two, three lower highs, right? Making a resistance. And I'm going down here and I'm looking at this really, really low. And I know you guys can't see my finger on YouTube, but I'm pointing right here. Um, so we've got this low, this bounce right here, which it is a key level, but I'm not counting it out as a potential support. Um, and that being said, would give way to a pretty strong move to the downside. But one thing, and I'm going to erase everything really quickly. So one thing that I also see, I don't usually, and this is a good example of how I use it because I don't usually use the 500 HMA, but the 500 HMA is a moving average that when you cross above it, you can expect some serious upside. When you cross below it and hold, you can expect some serious downside, upside, downside. Um, it hardly even touched it for a long time. But anyway, we are at it. So if we're going to bounce and we're going to break and try to go for a breakout, right? So if we're going to try and break and make our way above 1150, then that would need to happen at that 500 HMA. So 500 HMA, pivot point, 200-day moving average, all at the same spot on the chart. And so if a bounce and a reversal is going to happen, that's where I would like to see this. But one thing I want to discuss before going any further is that if Tesla has a falling wedge, and if it does bounce, and so I would say accurately watch for a bounce at 10:08, 10:08, that's where it looks like on the hourly. So at 10:08, if we see a reversal, I would expect for us to at least hit 1085 or 1068 as a potential reversal level. And that's where you would want to look at SPY and the overall market in order to kind of look at where we may end up seeing our next hit of resistance, because you have that 1085 level and then you've got 1108 right above that. So um, I use TradingView. All right, so I've got Tesla, JD, Facebook, all on the watch list. FCX. So I want to talk about this one because the setup on it is phenomenal, and we did catch it right here. I it popped up. I was able to trim out of some of it, and then it fell really hard. I hedged it a couple times, but I was trading other things that were able to kind of like hedge my account out of it. Um, but the beautiful thing is this setup right here. So you see almost like this beautiful channel. One, two, three major bounces off support, 200-day moving average here on the hourly. And then you've got the 49.75 level above us. We closed with the hourly flag, and we did confirm what looks to be a bounce. So if you look right there, now we need confirmation, and confirmation comes above 49.71 and $50. We close both of that, and we can start looking at new highs of 53.63 or even as high as 54.40. So I do like FCX. The only thing that I would say is concerning is this is what a support bounce looks like, and this is what a support bounce looks like, and that's what a support bounce looks like. And that's, I could go on and on and on. But that's not really what a support bounce looks like. So, what's up, Sneak? Okay. What are my thoughts on sector rotations? You should be paying attention to those. You should be paying attention to sector rotations. Absolutely. Um, you know, tech materials. You can see the Dow, right? And the divergence from the rest of the market, the Qs, right? So the Qs fell the hardest. So setups like Facebook, which held a bit of a divergence from the crazy fall that we saw, um, would we would want to see, a rotation back into tech potentially to allow for a reversal. So, or at least confirmation of that sector um, rotation. So, not a problem. All right. So if you guys want to go ahead and drop your request, if you guys are on TikTok, make sure to leave a like. Um, Same with you guys on YouTube. I really appreciate you guys hanging out with me and tuning in. It is much appreciated. All right. So let's scroll to the top, and I see somebody is asking about Microsoft. Um, and this is the beautiful thing about um, what we've already done. We've already covered the Qs. We've already covered SPY and all that jazz. Microsoft has a really interesting setup right now, and like the rest of the tech, got the crap beat out of it. You can see that our bear flag that we had talked about, I think on Thursday, did break down. Did give us a low of 296.25. Didn't really make it any lower than that. That being said, I want to show you kind of what I'm thinking right here. Now, please keep in mind, that Monday is coming, okay? And the gap down, gap up situation is and will change everything. So whatever I do right now on the lower time frame might not necessarily play out. So here you can see that there's obviously um, a downtrend coming from here and a support level at 290, 297, 296. That being said, this is typically a continuation of the downside pattern, but is missing a third rejection off of resistance, which may come at 300. Uh, if we gap down, then I would just be expecting a push back up to fill that gap. And unfortunately, when that happens, you start to build things like this, where you might end up seeing, and I see kind of a kind of what starts the beginning of what looks to be a channel. So I would say Microsoft might be gapped down around 294 before popping back up and retesting here. But if you look at the daily, um, we are at the 200-day EMA. So if that reversal, right, and if that reversal doesn't work out, and we do see continuation to the downside, so the gap fills and then we continue back down, losing that 200-day EMA on the daily would be not great for Microsoft's cause. It would probably see itself down to about 295, and then possibly hitting a new low around 293. I might pull my my pip is all the way down here. Um, maybe on the hourly. Okay, so yeah, I was right. Basically, it says 290, 270. But I said 293, so I was 20 cents off without even using the pivot point. I would actually stick to my level and ignore that pivot point, due to the price sticking to this one level. So you see right there, pretty much adhering to 293. So it either 293 may be that level to the downside, before or where you get that bounce if you continue to fall. If you have any requests on TikTok right now, hit the link in my bio for the YouTube and just ticker name or dollar sign and ticker name, and then you guys can hop right back in the TikTok stream, and then you can also go and watch it later. All right. Lastly, for Microsoft, there is a higher time frame downtrend. So if this does end up bouncing up, like I said, I would anticipate this downtrend right here being retested. So keep that downtrend in mind. It's going to act as like a magnet. And because it's the 200-day moving average on the daily and a short week, we could stick around this 200-day moving average for 4 days straight. So this may be our prison for the remainder of the week. So we'll see. How do I feel about using EMA crossovers as a trader in the beginning? So that was actually a part of my trading strategy. I used hourly and 4 hour EMA potential EMA crossovers for swing trades and long swings. So yes, I do think EMAs are great. No, I have not covered AMD. Do you happen to follow the Mullen stock at all? Not very often. What do I think about DD this week? Well, you know me, I'm short on China always, but um yeah, let's see. Let's start fresh on DD here. DD. All right. So with that much downside and this much weakness in these candles, 238 is the level to break to the downside. It's that simple. You have a gap to fill all the way to 180. That being said, a lot of the times you'll see something like this, and maybe, right? Maybe a resist. That's kind of stretching it. Hold on one second. Let's step back here. Okay, so I don't see a resistance. So if you bounce, I would say the first place to retest, look at the 50-day EMA, and then watch this key level that I drop. Right? One, two. So if we bounce, that 50 EMA is going to come down and it's going to block that gap. You break it, that gap is yours. 373, and then you'd be going for the point of control at $4. From there, you could definitely see something like this. So just keep that in mind. DD's a doo-doo stock in my opinion. What time do you start? I tuned in. I did do Tesla. I just did FCX, Snapchat. So Snapchat actually, and I was looking at this and I didn't save it, but this wick, I ignored it. I shouldn't have. Um, GAN fans may be applicable here, but it's not even worth going into. So I think I talked about Snapchat previously, about these key levels for Snap. So that's $40, and you didn't even hit it. All right. So on Snapchat right here, you've got a lot of weakness, just like with Facebook, just like with Microsoft. A lot of these have that really, really weak um, candles that closed the last week. That being said, we have a short week this week, which could lead to less volatility, which could keep us in this little pocket right here on Snapchat. But the good thing about Snapchat is it has really, really clean levels. So below 34, and I would actually be a little bit more aggressive with that. I would say 34.50, 34.50 and 33.70 are two levels to watch for Snapchat. And those would be levels that I would mark to the downside. You've got a pivot point right there, and you've got your whole ribbon indicator, which is currently green. But of course, we can change that with just one day. Anyway, to the upside, you'll see that the wicks right here for Friday and for Thursday, and the body close right there are all hovering around the 9-day moving average as well as the 50-day EMA, and that's 37.15. So above 37.15, you may take a small crack at this gap, which is 38.28. Not a lot of money to be made unless you're trading with big volume and size. From there, of course, you would like to try and break this overall downtrend. Otherwise, otherwise, I would anticipate Snapchat falling back down here for what would likely be a massive continuation to the downside pattern, which would likely also have Snapchat falling into the $24 level if the market fell back pretty hard. So, um, yeah, Snap sucks. Thank you guys for likes. I appreciate that. We got all the way at 4.3K. All right. So the next one that I see is this it. Confirm that this is the one that you're talking about before I go into this. AMT looks good. This is American Tower Corporation. Automatically, I see a downtrend there. I see a corresponding pivot point at 288. I see a bullish buildup underneath the 500 HMA. Nice movement. And what did we just talk about? What did I just say? A EMA crossover. An impending EMA crossover. What does that look like? This is exactly what an impending EMA crossover looks like. So the first initial one that you're usually going to see is the 9-day moving average, is the fastest moving average, and it's going to smoke with good volume. It's going to smoke all of those other moving averages, leaving them back usually around their point of control. This is 250. That means that usually usually you're in for some consolidation. Now you saw two dojis here. That's indecision coming after a huge buildup. So I would say underneath for 264, you're likely going to pull back. But this is good. You want that. You want to pull back and you want to accumulate because you want to break up to that 283. I would say 283, maybe 285 mark, depending on the time. Um, this is really great though, because once these moving averages cross up, they're going to move up. So even though you consolidate here, these are going to catch up data wise. And I'll show you guys what that looked like. So a lot of you guys, do I ever, um, not all the time, no. So a long time ago, and it might not even be worth discussing, but a long time ago, and you can go verify this in the Discord. I called Alcola. It was at $14. Right now, it's at it hit $100, whatever. So it was at $14. I was calling options on it, and I was looking for EMA crossovers in the market. Now, this is a perfect EMA crossover, probably one of the most textbook EMA crossovers that you could possibly hope for, because one, you have a catalyst, something to bring your attention to it, and this is initially what brought my attention to Alcola. I didn't really wasn't familiar, super familiar with what they did. And so I looked into it. I read about them. Um, I went and got their previous earnings. I went and saw how they performed. I saw that they had also previously been a pretty expensive company, right? So we've also been back in this $100 level. Before we've been all the way up to $110. So I was like, okay, how Cola's looking like a pretty juicy find, considering the price. And you got multiple EMA crossovers here. But anyway, um, so earnings, catalyst, setup, you hit it, you reject it, and so you consolidate it. One of the things that I was looking for here was to maintain and hold the whole ribbon indicator. And then secondly, I wanted to break back up above our most bullish moving average, which was the 9-day moving average. Now, when you're swing trading, you're a lot of the times you're buying long and you're holding long. So 2 days of small red, even if it brings you back down to your entry, is not worth cutting at all, especially if you can add more and you look at it as renting equity. So anyway, you get the beautiful crossover here. All indicators start pointing up, and then all at once you get a massive crossover. And then it's only when those EMAs start to spread is when you finally get those retracements, and that can be followed through all the way back. So Will was destroyed. If you guys have requests here on TikTok, guys, I am live on YouTube right now taking your guys' requests. Uh, I just tweeted out my indicators on my TikToks for you guys to look at. But AMT looks pretty good. Tilray, probably not looking great. So not looking terrible, still holding what I would say is bullish. Like I said, that gap was going to get filled. You fell below that gap. I'm still not concerned, guys. I talked about not being worried about this as it goes through with the vote. I mean, we've got legalities to get through. So I'm not super concerned with any equity on Tilray, but I will tell you this, it does have what could potentially play out to be that reversal pattern that we're looking for. So maybe this week we hear something about cannabis and we shoot back up 743, $8 even, and from and above $8.15. I think that Tilray, with the news, will likely move to the upside. To the downside, if we lose the 625 level, then I mean, honestly, it would probably be because legalization or anything close to it is not happening. And unfortunately, we would see ourselves back down to probably $5. What's that plunger? Um, If you guys have any chart, guys, I can only see two comments on TikTok from my perspective, just like you guys can. You may even be able to see more. Um, but that being said, guys, if you want those requests, if you want me to be able to see it, or those questions, please just put them in the YouTube channel. All right. So we're looking at, and let me, I don't know why it just popped in my head, but I feel like it's worth saying. One of the reasons that I'm charting at night, that we're charting at night, is to get the framework, right? We're looking at the blueprint. Tomorrow when we really get to see how that analysis is going to play out tomorrow. So if you gap down below your proposed support, well then you got to switch it around. You got to figure out what you missed, or what you may be missing, or if it's just going to correct. So, you know, for those of you guys who are trading, I try and make this definitive. Like there's a difference between what I do and what you can do, or what you have to do. So spending time on the tickers that you're looking at, charting them, getting their setups, it's tomorrow, and that's why I do wake up early, so that way I can look how futures are moving, look how pre-market is trading, and then get an idea um, of how I want to trade that day, or if it even if it's worth trading that day, based on my analysis. So just throwing that out there, I thought it was worth mentioning. Anyway, so that's Tilray for you. I'm going to set a couple of alerts at 684, and I'm going to set an alert at this trend line and at that trend. All right, so I'm going to do the next one, which is Hood. Yeah, we trade crypto in our Discord, but I'm not Simple Stacks, guys. Just the I'm just the person, just a part of it. I am not the only guy in there. So there's a lot of other people trading a lot of other different ways in there. So um although it is worth mentioning, guys, I do not think that we have for our premium Discord, for those of you guys who are trading with us, I don't think that we have any spots left. If we do, um hold on a second. We have two left. So we've got two yearly, and we've got two monthly. So, but the rest of this month, guys, we will not be taking any new members. So, we'll see. Okay, so Robinhood looks like a falling wedge. Although you've gotten a lot of rejections off the top. Um, he's the face guy. Yeah, right. Um, I don't know what my face does. Yeah, right. All right. So this is kind of a wonky chart here, like for real. Uh, let's mark out some key levels first. So I tell you, I already can tell you what I see, but I don't think that it's going to play out the way that it looks. So you kind of see this falling wedge. Now I'm not sure like what the short interest is at. You've got a perfect little downtrend here, all following its EMAs. So here's the deal. Um, I think it's pretty simple for Hood. Although it has what looks to be a reversal pattern, it doesn't mean that that's what's going to happen. Oftentimes, reversal patterns can be built just by simply having low volume. So that being said, Hood below, and I'd say 1085 and 1040, you should see Hood down to around 996, $10 even. Um, on the flip side, if you can reverse, there's a gap to $12 above you, and that's going to be a break above 11. 72. You can see on the daily that this is relatively low volume, and the highest volume came on Friday at the end of the day when you made one of the smallest candles. So it is possible that you see a retracement back up to around 12.75, maybe even hitting $13. So I would say that because it's showing weakness to the downside, I would be, if you're bearish, I'd be looking for the bounce rejection. Looking at levels like 1250, like I said, let's see here, in 1335. So, um, yeah, so I mean, like that's and anytime you see a falling wedge, normally you can expect about a 50% reversal. That's usually what I look for. So all the local stores by you are out. Man. Anyway, that's good. If it does end up reversing, there's the possibility for a inverse head and shoulders, but that is highly unlikely. Especially due to the fact that they all hit the same $10 support. So holy shit, man. All right, so Merck is absolutely skyrocketing. This is absolute insanity. To see this thing move like this. Double bottom. Some part of me, I don't know why. Apparently, I had this charted. Whoever asked me to chart this, congrats. I don't know. That's awesome because this thing looks pretty cool. Key level break, 84.23. You're heading up. You hit 87, basically $88. The next level above you is the gap fill at 89.34. Step out to the daily, and we talked about kind of what Mark was looking like. Um, Double bottom right there. So above that $89 mark and $91, we may see Merck going into all-time highs. But one thing to take note of is that Merck is definitely overbought, and definitely due for a rollover on the TTM, and definitely losing volume. So I would say pull back first before trying to go long on Merck, for sure. So we did cover FCX, and that is on the YouTube channel. All right. So Amazon actually absolutely got mollywopped last week, and it kind of had me thinking like, yo, because that's I mean, you saw this downtrend here, but this is what happens when you find your downtrend and going across it. This was not a hard level to find. So just slap that there, and you see one, two, three. I mean, just major consolidation, major rejections, all happening at this level, and it's really, really hard to envision Amazon recovering from a rejection like that. And what you have is a 9-day moving average crossover to the downside. Um, 500 HMA coming in hot. And now it looks as if you're about to go and hit and head down for, and it's too early to tell, but it kind of looks as if you're about to kind of head down to support. And we know that Amazon drags the market often, so this could be, another leading indicator. But I would say that Amazon below its current level of 3,000 has a level of around, or excuse me, where did it close at? 375. I'm sorry, 375. You've got a retest of 3K coming with a quickness, and you can see that level right here. So all the way across 3K, and then stepping back down, and this is on the daily, mind you. You've got 28, 26 as another level to the downside, and then ultimately that final support. Stepping down to the hourly because it's always important to do so. Um, let's see. So it looks like there might be a resistance pretty far away, but I think that might be out of the question unless you do break. What this is why it is so important to do multiple time frame analysis. So here's a lower time frame. 1, 2, 3. Remember my rule of thumb? 3 rejections off of support, and then we can expect further downside. So you do get that downside. You've got an H pattern here, right? Why? Because it looks like an H. Break 386. Like I said, you've got, I'm going to, like I said, throw back in 375 and 370. And then you've got this pivot point here at 30, 37. And I can see why that's a pivot. It's actually 30, 40. But right there, look, bam. Look at the heavy consolidation there. Um, so that's what I would be expecting from Amazon to the downside. So just got out from the ER and you're doing technicals already? Yes. So here's what I could see happening here for Amazon. Leg up, right? So looking at 31.37 and 31.48 for potential upside breaks or potential moves to the upside, but really the true level is going to be 31.72 for any upside. But 1, 2, so you could see a resistance test, and then 3 if you want to see that break. If we gap down, then the whole story changes. So, all right, we have AMD coming in hot here. Lots of requests for AMD. All right, so the daily chart is just ugh. um all right. I don't know about y'all, bro, but this shit is ugh. That's one of my favorite sounds. On TikTok. Okay. Downtrend 1, 2, 3. Projections support 1, 2, 3. Now, this is rare to find on the daily to be so technical like this. But this is what we are, this is where we're at in life now. It's just that technical. So, this level, that's $99.26. You lose $99.26. You've got a bounce level at 97.65 to retest that level, I'm sure. But then ultimately, oof, yeah. A lot of tough levels here actually. Let's backtrack. So you've got 98, right? 97.88 and $98. Look at that. That is the previous rejection level there. That's how I found that level. Losing those levels, if you lose that level, next level down is here. Look, 1, 2, 3, 4, and that's $94. $94 to the downside. And I would speculate that that's where you would likely find yourself with AMD. Now, that's if the market is possibly falling. One thing to keep in mind is that we are running into earnings season. Last earnings, we were at the same price that we are now. So we have, and this is May 3rd. Okay, that's the anticipated earnings date. So we still have plenty of time. But that sentiment can and will take over, especially when something looks so obvious like this. So that being said, we're going to go down to the lower time frame again, right? We're going to see if we see any type of reversal patterns. Here's a resistance. There's that. There's that. And there we have it. So if you bounce up here, your reversal likely happens above 105. 105, and I would anticipate retest of 109, the pivot point and point of control at 113, 114, excuse me, would be the level that I would be watching as well. So AMD has an interesting setup here, and really, really definitive key levels, right? So the hourly is feeding you really, really beautiful levels like this one right here, that 105, like I just talked about, the level that we're sitting at somewhat. And then to the upside, right, you've got the gap fill here, good level 106, another key level right there, and that is 109. Just I didn't even mark those out. I did that on the higher time frame. But yeah, that's AMD. So possible bounce, yes. Do you lotto earnings? I don't lotto, I straddle. Yes, it is a lotto, no matter how you twist it. It is a lotto. Um, but I do straddle earnings with a lot of risk. Let me throw something out there, okay? And we've talked about this week after week, guys. I know some of you guys are struggling with it. Everybody wants to come to the feeding trough every single day. Why? Because we know that we can make a lot of money. But we need to remember that one of the hardest things is knowing when not to trade and then not trading, right? So not trading is hard. And then knowing when to not trade is also hard because there's always the feeling that something's going to happen and you're going to miss it. The fear of missing out will cause you to literally blow your account. And so the reason that I'm even saying this is that we have a 4-day weekend, right? We have banks and we are going into earnings season. So those are variables that may change the climate. We also have an reignited war or conflict in Ukraine. We have Russia pointing the finger at NATO and the United States directly. Those things could bleed into the market. We have plenty of economic data for next week. So these are all things to keep in mind. If you don't see it, you're investing in your future and your future trading and your future account by not trading. And that's something that you really, really need to keep in mind this week, right? There may not be these super extended moves, these super crazy moves. I hope so. I hope we get great volume. But from what I know, from my experience, is 4-day weeks are not awesome. Okay. They're not great. It's like, it's like, it's like the ollie of trading weeks. All right. The next one that I see is I think I did Microsoft. I did. I did. Do you use TD Ameritrade charting? I always use TradingView. Yes, I use TradingView. I don't use TD Ameritrade. Um, what is Jets? Oh yeah, the ETF for I forget. All right. Sheesh. This looks like every airline's mess. I Why you trade like that? Blech. All right. So you may not see it, but this has the head and shoulders type vibe. Shoulder, head, kind of got crazy, but recovered and then made the shoulder anyway. You're currently sitting at your point of control on the daily. What does that mean? That just means that's the strongest level near you, right? It's a really, really strong level. That's it. That's what these volume bars are over here. That's what that big ass red line is. It also means that that's where a lot of shares were traded at that price. And that's $20 to be expected. So underneath $20, let's mark out a couple of key levels here. You got BAM, and that is 1961. You've got Boom, 1925. Remember, these things don't move like all the other stocks. They don't move in dollars. They move in pennies, damn near. All right, so key levels here from a distance: 1957, 1925, as to be expected, 1888, S1 at 1844, and then support, which is likely going to come at 1756. So that's to the downside. Now you're at your pivot point, so reversals can happen, but will not happen. If you zoom in here, you'll see the point of control because it is visible range. The visible range point of control for back to November of 2021 is the a little bit above us, and currently our 9-day moving average, and that is 21.28. So if we see, and we see this all three red candles here, if we see any type of pullback to go and fill that very tiny gap, that would be the level that I would be watching. 21.26 for a retracement or reversal. One thing not to count out, and that is very obvious here, is this. There is a resistance right there, and it will be retested. Um, Not sure when, but I would suspect possibly levels like 1965. And you got to think the trajectory here may lead you down to like 1865 before bouncing and then falling even lower. I'm not going long in any housing market trades. And which this sector specifically? Chosen one, or which do you have like materials or not a chart fast? I If you just kind of see things like pattern recognition, it's our brains are meant to do it. Our brains are built to do it, you know? So like the first things that we see are usually the things that we have seen or traded or played before. Oftentimes that produce some type of serotonin, aka you made money on it. All right, so there no resistance up here is going to be taken seriously from me. But I would, and I think I mentioned this that there was a potential cup and handle. I think this was my bullish handle. We failed it, so that's actually pretty. It's cool to see because it worked out. But you see the body of this candle is actually at my support. Let's go to the hourlies, check it out. All right, so there it is right there. Crazy. Look at that. Absolutely bonkers. Um, Kind of giving off that reversal type setup pattern here. Really, really wonky wicks. Looks like you're about to make a really wide price range. Um, I don't know. That's disgusting. It's a Head and Shoulders hourly time frame. You've got 120.57 to the downside, 120 even. And then below that, if you lose 119.36, and I'm actually going to add an alert to that, 119.36, I would anticipate a pretty decent drop on SQ, probably into the 115s. Otherwise, it looks like you might need a bounce. The bounce may come at 120 again, and then a retracement or retest at 130. So there's a $10 move on a potential reversal here. So um, let me find out you're bougie. I'm bougie. What do you mean? Oh, I'm talking fine. I'm not. Trust me, I'm not bougie. I don't know if I've ever said that, but I mean, if the goal is to make like at least I don't know 200 million, 300 million one day, and then go broke. I'm gonna do all of the things that I just worked for inversely. Obviously, taking care of what I need to take care of, but I'm just gonna just go around the planet giving all the money away. It'll be much more fun. Um, Probably way more fun. Let's see here. Comes and it goes. All right. Let me mark out that level on SQ really quick because I feel like I didn't do that very well. Okay, so basically 120 ups, downside, and 130 upside if you're going to if you even have any upside in you. So if you guys have any comments or any requests, please drop those requests on the YouTube channel, guys. But I am about to finish up here. It is 9:30. We gotta go night night. So tomorrow's not poopy, as Ellie would say. All right, everybody's dying for Apple. Oh my goodness. Getting better though, my voice. All right, real quick. So pretty obvious that there is a support there. Uh, kind of. Hold on a second. Yep. Okay. So pretty obvious that there is a support there. Pretty choppy weather. Um, Very clear level on Apple at 173.45 for a very small gap fill, like the rest of the market. Everybody, this is just kind of how everything is set up. Everything is set up this way. So the way that we open tomorrow is going to matter a lot. If the markets reverse overnight and we see a small gap up, maybe we see green red. If we gap down, that it would need to be a very big gap down. So I'd like to see a drastic or serious gap down for Apple below 170 for sure. Basically 167 or 168 would be a comfortable level for me to the downside, and more than likely where we would gap down if we did have a serious one. Um, that being said, uh, if we do reverse by some chance, 172.40 and 173.45, like I stated before, those would be levels to watch for potential rise into resistance 1, 2 at 176.50 after the gap fill and small pivot point. Daily time frame for me on Apple kind of makes me feel as if we found resistance, right? So from our previous all-time highs, that this is our new resistance, because reversing from here, if you look at the daily candles, um, on Apple. Definitely weak, right? And we could expect weakness last week. So we could maybe even expect 3 days of going to hit resistance. And then maybe Friday setting up for the real week, or Thursday, excuse me, setting up for the real week. Because again, we have a 4 day trading week. And again, from my experience, 4 day trading weeks are not awesome trading weeks. We do have some economic data and certain variables, as I've discussed earlier, that may change that. But so far, we're at on the chart where everything is really at a pivotal level. Everything is either at support or barely holding their bullish setups. And looking at Apple, I want to say and I want to believe that it has, a bit of a flag like setup. And 11 consecutive days of green on Apple is, you have to expect some type of choppy pullback. And that's what you see. You saw from the highs of 182, 178, 179, all the way back down to 169. So $10 drop. So seeing a bit of a chop or fill into that gap and then hitting resistance may be what next week brings. And then one thing to keep in mind on Apple is this resistance right here, right? You've got 176.47 and, or excuse me, 177. It lines up perfectly. That is called a confluence, right? We've got two intersecting resistances or indicators. So, um, thank you guys for all the likes. Almost 6K likes here on TikTok. Um, if you guys are on YouTube, make sure to leave a like too. I appreciate that. Alex Gonzalez. I got you. Hold up. Uh, all right. So I'm trying to kind of skip around here and do a couple of different requests. So we got Fubo. This is an absolute dumpster fire right now of a stock. Although a lot of random analysts think that this is like the next big one. But you may find yourself at new lows before that even happens. I will say the descent is rather slow. You've got one, two, three support uh, bounces or support trips, and then you broke them. I would say that the confirmation of the downside happens below 555. If you drop there, going back to ancient times for Fubo, it would be levels like 416 that you would be looking for. Otherwise, Fubo is really in a place where it kind of is in need of a reversal. It may be worth looking at as far as analyst upgrades. You'd want to see some type of catalyst like that in the morning. So, Neo did, yes. I feel watched. Prudence, dear Prudence. Um, Neo did get a production pause, yes. How do you feel about a fog in a blender? What the? Yo, that price prediction on Dollar General was out of this world. Dollar Tree, what are we doing? Oh, we're just barely popping on Dollar Tree. Dollar Tree's kind of garbage though. Costco ripping, Walmart ripping, Target kind of going in, getting a little rippy. You got a doji right there. That might be an interesting play. They're not really in the same sector. All right, guys, I'm gonna do a few more requests. I'm gonna go ahead and call it a night. I'm tired, ready for bed, and I want to do most of this work in the morning. So Twitter, what do we talk about? Man, I think when the news came out, I mentioned a couple of times how, and I mentioned it again tonight. And dude's not even on the board yet. That this wasn't news that is like gonna make them money right now, right? It's not like I mean, you might drive more attention to Twitter, but nothing is gonna like it's just speculative, right? Now you do see a one, two, three resistance. You've got a clean downtrend right here. I'm only speculating that this is our support level. I'm not 100% on that right now, but I'm only looking at 4470 71 as a and look at the market. So look at the cues. If it's holding a divergence, so if the market's ripping and Twitter is lagging, then watch for Twitter to fall when the market does pull back. But 4480 would be where I'd be watching Twitter to fall. If you lose 4480, you've got 4373, and then you've got ultimately a level 4240. I mean, I doubt that maybe the entire gap gets filled, but that would be pretty damning for Twitter. So I reckon that they'll say something before that happens. Is Game gonna rip this week? If anybody says that Game is going to rip this week, they have no idea what they're talking about. Yeah, Twitter being pre-installed, that'd be pretty crazy. Oh, beautiful tomatoes. All right, so Shopify had the head and shoulders, which did end up playing out to the downside. Now looking like it has a falling wedge. It's the most fancy wedge. Let's go to the 15-minute and clean this thing up. All right, so less of a wedge, more of a channel. Um, that being said, Anywhere below 590, 580, shop is likely going to fall out of this channel and die. I didn't mean for that to sound so bad. Um, it's gonna hurt. You got a rounded top on the daily. You got a support at 580 to go and possibly hit. Below 580, you've got 540 and the low of 514. And that's shop on the daily right now. I do see. I don't think that's applicable. Nope. I do. Yeah, no, it is. Okay, so I do see a downtrend, and this would technically be that downtrend retest. Although it's disgusting and really, really harsh, it can still continue falling to the downside and break through that previous resistance turn support. Um, but things are looking pretty rough for shop. I'm not gonna lie. This looks pretty bad. You can also see tight consolidation on Shopify right there and right here, and then a clean break to the downside out of it. So I don't know. Shopify needs to bounce either here at 600 or at 585 for an inverse head and shoulders, maybe. So, all right. SOLX, which is the uh, bull semiconductor Direction Daily. I said that all backwards. Direction Daily Semiconductor Bull 3X shares. Anyway, so semiconductors have been looking terrible. That's number one. Number two, you're in a downward spiral, really is what you could call it. But you're in a downwards channel. Um, so real quick before I break off, I know a lot of you are gonna go to bed. Thank you for the tomatoes. You guys know I love the tomatoes in the chat. I will be live as early as I can tomorrow morning. If you are in the Discord in the premium, or if you're in the Discord for free, please go look at the PotterStocks channel. I've highlighted it. If I haven't gotten you guys caught up, I just want you guys to go kind of get a overview of what's going on right now. Um, but um, but anyway, so I just wanted to mention that really quick. So XXOL or SLXL is currently at support, currently missing a third tap of resistance, currently with the volume and trajectory to the downside. Now, all of its counterparts, NVIDIA, AMD, all have and are at supports or just absolutely free falling. So that being said, with XOL, I would like to believe that this $27 mark is where we reverse and we see a serious retracement or at least a retest of 3280. So something like this, right? Bouncing down and then giving us a recovery, maybe here, right? Or maybe even up here. That's what I would be looking for. If it gives you that bounce, right? That's not to say that you can't go and hit that support one more time, which of course is worth watching because at that point, semiconductors would have gotten the crap beat out of them, and I would be looking for another test of resistance if you do not fall and break out of it. So, thank you for the chicken leg. Chicken wing, chicken wing. Costco. I love Costco. I placed a 300 or $600 price target on that bad boy a while ago, and it just ended up hitting out of nowhere. I found this kind of interesting. So there's a old rising wedge that ended up textbook. Look at that rising wedge. That is sexy. Beautiful rising wedge. Just absolute flush party. I hope that's not like a derogatory term. That sounded weird. Um, and then you've got what appears to be Costco's new channel. So I would actually suspect it is not 100% sure, I could be 100% wrong. Costco has absolutely been on a tear since $516 in from March 1st to April 7th. It has gone basically over $100, or about $100. If you want to even count a little bit before that in February, you were at 484. So definitely over $100 run. And that includes earnings. So you made it through earnings, heavy consolidation, and then ended up making a clean break to the dump side. So here's what we do when we have speculations like this, right? Because that's what they are. I can't tell you for sure that this is real as a resistance, but it sure is holding respect. So now it brings my attention to it, and I start sniffing around and looking for support. I also think that it's worth mentioning that this is where and how standard deviation channels are often found. So I could even just by hand, without even drawing it, show you the standard deviation channel that likely just formed for Costco. So let me just give you an idea of how these move. So usually at this price mark, you can see heavy up and down, right? And I'm not going to try and be perfect and mark this out, but you can see stuff like this, right? You can see big moves to the upside. Look at that run. Look at that run. Let's actually do something else. Let's throw this out. And this would be a good last analysis here. So let's look at that, right? And then let's clone it. Okay, so let's copy it. Let's clone it. All right, we've got an identical one right here. Or not. Oh, hold on 1 second. Okay, and let's go line it up. Man, what is that? I mean, I don't know. I don't know. That certainly seems familiar. Crazy green run, right? 450 to 560, 485 to 608. So that being said, it doesn't mean that it's going to go for a complete reversal, but you may end up finding yourself back down at this standard deviation line. And then from there, depending on the climate, right? Because you can expect the socioeconomic, economic playground to be volatile, hence affecting and giving up and downs for certain prices. So if we let stocks fall, like Bank of America is talking about, in order to ease inflation and stuff like that, maybe that goes against Costco. But anyway, this is only speculative, but you've gone on a crazy run, and it may be time to slow down. Like I said, and I'm going to repeat myself, how that happens, I'm not calling for puts. This thing could make, a lot of consolidation in here. You know, it could just chop around in there and then do the same exact thing. But we'll let it show us how, because anywhere above 612, it has extraordinary price targets. But here's the thing: if the price target is well far away, like Tesla at 1100 gets a $1,300 price target and then runs to 1200 because of it, you're not going to make it to 1300. You're not going to make that in one single solitary push. So even with those positive price target upgrades that we've been getting for over a week, that doesn't mean that we're going to just make a solid continuation run to the upside. So I have looked at Twitter. All right. Um, all right, everybody. I'm gonna go ahead and call it a night. I've done quite a few tickers here. Um, Tomorrow night we'll stay up a little bit later on live, and we'll do more requests. Sunday it's important for me to get to bed, relax, and wake up early so that way we can start the week off well. Um, Anyway, you guys have a good night. Thank you for tuning into the YouTube channel. I will be live on the YouTube or Discord tomorrow morning. I haven't checked since I started the stream. We only had two spaces left on the yearly and two for the monthly. That's for the rest of the month. The rest of the month for me is going to be insanely crazy busy. So we're not taking on any new members until that time, probably towards the end of April, and we'll let you know if anything changes. Of course, if you're brand new, don't pay for anything. Don't pay for my stuff. You know the deal. You need to wait until you can't use tools unless you know how to use them. So, uh, anyway, yeah, I will see you guys tomorrow morning. Get some rest, mark your levels, go to sleep because don't have any anxiety about it because tomorrow's open is going to tell us everything we need to know. All right, peace out. There's always like an awkward silence when I have to